Hi, everyone. Good morning. Pleasure to have you with us. We're just waiting on Steve to join us in a couple of moments. He should be on.
Can everybody hear me?
Hey, Steve, we can. Yes, absolutely.
All right. Hey, good morning, everybody. I'm really excited on this Monday morning. Those of you who are here, great. And those of you who are not, obviously, this will either way get sent to you at the end, and this will be your own in your own personal email. And just to give you a little heads up, you know, this has been a long time waiting for me, because with the volatility in the markets, I am literally getting so many people from around the world asking me to really understand futures. And obviously with the market volatility and the day trading requirements for trading stocks, I've seen so many people want to jump into the futures market, and I'm gonna go very, very slow here today. I don't care if we're on for an hour and a half. I'm going to answer questions at the end. This is going to be a webinar for anyone who has any interest in trading futures, from someone who's a beginner, someone who's been trading futures, things that I can teach you along the way to enhance your trading, and those of you who are, you know, been trading futures for many, many years. Either way, there's a lot of knowledge here that I want to teach. There's no greater joy at this stage of my life than to do this, right? To be able to take a step back after, you know, this August 1st will be 39 years of me trading the markets. And there is just the greatest joy. That's why I built Trade Easy with Joe and Ashling, and the helps of so many people like Albert and Kishore and so many people. And number one, also a lot of you really believing in me and my methods and my mentorship and my ability to teach all of you. There's no greater joy in my life at this stage than to help each and every one of you change your life. And so when I get calls from Greece, from Australia, from Russia, from all parts of the world, Romania, United States, please, 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 can you teach me how to trade futures? I've spent thousands and thousands and thousands of dollars learning and trying to learn, but I can't just get it. Well, you know, this is believe it or not, the futures markets for me are the greatest markets. Not to say that you can't make money trading stocks with me or trading Forex or crypto. I had people over the weekend making money trading crypto. And I traded nearly 2 billion shares in my life. So for me, really trading the futures markets is a significant asset to trade. And this is why I really am going to take my time today, explain things, teach all of you the whole beginning to end of the things that I feel, again, that should propel you to understand trading futures, to enhance your trading, and to give you better knowledge of the futures markets, okay? For me, like I said, I spent 9 years of my life developing the software and that I use each and every day, and the software that you can have at your fingertips. And again, I'll cover all this. There's no greater joy at the end of the day than when I get text messages or phone calls and my phone blows up, because, as you know, I give my phone number out to the entire world. How people just show me what they're making. And even if it's just paper trading, they're getting it, right? Because I always tell people that this is a marathon, right? Not a sprint. I tell people, if you work, hard work works, right? I tell people to ask as many questions as possible during the day. No question is ever stupid. You got to be proactive. As I even teach my children, in today's world. I tell people that it's my job to help change your life. If you just do the simple math, you can make $500 a day. That's $125,000 a year. If you can make $1,000 a day, you made $250,000 a year. $125,000 a year, $250,000 a year, right? Sorry. So the most important thing is to be consistent, right? And that's hard, right? It's hard. So the approach that I take in teaching the markets is really not the approach that most educators or mentors will take. I teach during a streaming live channel each and every day during real live markets, because the research that I have done for those 9 years, close to 9 years, I can show you how these patterns, the way I have my overlay set up, my chart set up, my algorithms and everything, the whole package set up, which I'll go over, how these patterns repeat themselves. All you need to trade is to make 4 to 6 great trades a day. And that's what I've been telling everybody, that's what my research, whether you're trading the S&P futures, the 30-year bond futures, gold, even equities, Forex, crypto, you'll get 4 in a session, in a 9 to 9:30 to 4 session, you'll get 4 to 6 great phenomenal trades, patterns, strategies that set up in a day. It's really important because I always stress on the 5 key words: consistency, discipline, confidence, patience, and passion. Well, consistency is what we try to achieve each and every day, right? So I'm here because I'm not in this to be right 50%, 60, 70, 80% of the time. We got to be 90% or better, or else it's not worth it. And for me to do this, and for me to trade the way I traded, and for me to teach you, we got to be 90% or better. You know, second, discipline, right? We need to have discipline. As you all know, there's a story out there that I told you each and every day about discipline. My first trade that I ever did in my life was, I was on the 40 of the American Stock Exchange, and I had $3,000 to my name. The minimum wage was $2.10 an hour. And I go and I decide to open up a brokerage account, and I go, a week after I open it, I go buy 5 Feb 50 calls in American Cannon option at 2 3/4. That was the middle of October. And by Christmas time, the stock went from 51.5, 52, all the way down to 45. I bought more at 1 7/8. I bought more at $1.25. I bought more at 7/8, and get the picture. I bought all the way down. I had no discipline. I had no money management skills, no nothing. And eventually, I still had 2.5 more months because February was the expiration date. And by Christmas time, they were trading like $0.25. And I never forget, I had my head down, my hands on both cheeks, thinking, oh my God, I just blew $3,000 of my money. And some guy patted me on the back around 4:30, and he said, hey kid, go home, you can't turn the machines back on. Just like in that movie Trading Places, you know, it says, you know, turn the machines back on, right? And then January comes around, the stock's trading around 41, 42, and then basically about a week before expiration in February, the stock goes from 41, that week before it goes from 41 to 54. Well, at 3:45, the day of the options were going to expire, I'm hanging up the phone. I see the broker walking into the crowd to sell my whatever 15 or 20 options that I had bought all the way down. And I hear him say, you know, American Cam, 50 calls, 17 at whatever, $3 or something like that, or 2.5, 3, whatever. And as I see the broker executing the order for me, that was my order that I called in, My father is right behind me, and he said, "Are you out?" I said, "Yeah, I'm out. I just sold them." He said, when I came on the floor, because my father was a floor broker on the American Stock Exchange, he said, when I came on the floor today, Monday of the week, I found a penny face up, and I made a wish that you wouldn't lose any money. So he said, "What do you learn from this?" I said, "Whenever you have a losing position, you look for a penny face up." He says, "No, you idiot. You never average down." So I had no knowledge. And then I went right 5 minutes ago, I bought 10 Merrill calls like an idiot. And so I had no idea about money management. And I'm going to get all this, but I need to tell you these things so that you can remember these stories, because what I teach each and every day is visualization and repetition, right? I mean, I am so blessed to be in this career. I love it. I have more passion in my little pinky than probably 10,000 people that I know. I love it. And what fueled me to build Trade Easy is because I was sick and tired of everybody getting hoodwinked, right? I want to teach people the right way. I don't teach the conventional way, sitting in a classroom, teaching. I did that. I went to an online trading. I sat in the classroom. I got up after like 45 minutes, my partner, Joe, and the guy started chasing me down the hallway. I said, "Oh, no, sir. It's okay. I'm very experienced. I just want to see what it was like, you know?" So the way I teach, like I said, is very unconventional. I teach during a live stream, 9 to 4 each and every day. I do free webinars. We do workshops. I do end of day recaps. I really want to be as much knowledge and visual ideas at you, because these patterns that I'm teaching you repeat themselves. And the confidence, which is the third word, is because I'm showing you software that I spent close to 9 years of my life building to be able to give to you. The same charts I look at, the same charts that you look at. The same strategies I'm teaching on the telestrator are the same charts that you can have that at your fingertips, right? Imagine not having this. It's like flying an airplane or a car without any instruments, right? Can't do it, right? I always tell people, and I know I make a joke out of it, but it's a kind of a friendly joke. We're all like doctors. We're looking at a chart. We're examining the chart. We're looking at the strategy. A doctor looks at it. Oh, you have a hairline fracture. You have a broken bone. You have this. You have that. The doctor can make determination by looking at the X-ray, the MRI, the CAT scan. We're looking at a chart and we're identifying the strategies that I teach each and every day that now is embedded in so many people. There's no greater joy in my life than during the day when people call out and say, "Hey, Steve, look at this beautiful pattern here." Like looking at the currency markets, because they trade 24 hours a day. Walked in, I saw a phenomenal 10 strategies on the pairs that we look at, right? It doesn't make a difference. What most important thing is then patience, to let the pattern set up, and then to have the passion to really want to learn. The one thing I will tell you in trading futures, okay, is that there's no greater joy than when you see a great setup, a pattern develop. And then there's no greater joy than seeing the strategy and then executing it properly and understanding why it's going to happen, why what I'm teaching actually happens, right? So with that, let's just go. And so I wanted to give you like a little bit of a 5-10 minute overview of the markets and the things that I feel are important and why this webinar is so important, right? So let's start. What are futures, right? So futures were designed for the agricultural farmers back in the 30s, because they were farmers in cotton and soybeans and wheat and grains, and so those farmers needed to be able to then take their crop and corn and then basically then decide if there was going to be a drought or if it was going to be, they could sell it and lock in, or if they needed to buy, they would buy it because they needed to make deliveries. So the futures markets were really designed back then. And then obviously in the mid 70s and mid 70s, mid 80s actually, they started with index futures. So the futures markets gives you the ability, right, to have great leverage in trading, but also the ability to, what are you doing? You're betting on the future, right? You're betting on the future. Like you could buy Apple and you can hold Apple. And basically, you know, you're either investing or you're trading it. Futures, okay, and you're still betting on the future. If you're buying Apple, you want it to go up. If you're shorting Apple, you want it to go down. It's still, whatever you do, anytime you put the trade on, it's always looking outward towards the future based upon your decision of what you're doing. The futures markets gives us the ability to bet on the future of where that index is going to go. So, for example, a lot of people can't buy all 500 stocks in the S&P 500. They could do one of two things. They could buy the spiders, the underlying ETF, and they could just buy it and, you know, hopefully that the index goes up, or they can buy the futures contract for a lot less money, right? So the spiders are trading at 366. The S&P futures are trading at 3,700, okay? And guess what? It's a lot less money, a lot less leverage by buying the futures contract. So the futures market gives you a lot of leverage, also gives you a lot of great benefits in tax structure. For example, 60% you're taxed on long-term and 40% you're taxed on short-term. A lot of people don't know that. So again, the most important thing with regarding trading futures, you don't have to worry about the day trading rule, the $25,000 in your account, right? And a lot of people that are new don't realize that, right? So you really need to focus on what asset best fits you to trade. And I can't tell you how many people around the world, like I stated earlier, just want to learn about trading futures. You know, the one thing I'm going to tell you, and taking a step back here, I can't tell you how many people say, well, I never traded futures before and I'm scared of them. Why? Why? So you learn. Okay, you learn. If I told you we can make money trading water, does that not resonate with you? So water is calmer because it's water versus trading futures and the volatility is there, right? There's volatility in soybeans, pork bellies, crude oil, which is an animal most of the time, right? 30-year bond futures. How about stocks? I've seen stocks, you know, like Apple and Microsoft, Nvidia, Facebook, Meta, right? They're just as volatile, right? So there's no difference in volatility when the markets are really going than trading a futures contract. So for me, trading futures gives, if you think of it, you don't need that much money up, right? And I'm going to get into this in the next slide and explain the amount of capital that you may need, which is not really that much, to be able to achieve your goals that you can set each and every day, right? So if you want to trade, for example, Meta, $163.74 currently from Friday's close. If you want to buy, let's say, and you want to trade it, you want to buy, you know, 1,000 shares of Meta, that's $163,000 that you're going to need to have. Versus, okay, and then if you only have $25,000 in your account and you have 4-to-1 leverage, well, you can't do 1,000 because you're $63,000 over the margin requirement. So futures gives you the ability to really be able to learn the markets and learn it in a way that you don't have to be fearful of the markets. Number one, because we have technology that I share with you. And two, I'm going to teach you how to trade the right patterns. You know, just to give you an example, right? And I know this is a crazy analogy. So when I would I wanted to buy a motorcycle once. I've told people this story. And I said, yeah, you know, I'm going to go buy a motorcycle. A bunch of my friends said, go get a Suzuki, get a Kawasaki, you know, get a Honda, just learn. And then, you know, down the road, I said, are you crazy? I go in and I bought a Harley, right? Custom Softail. I went for the biggest and the best, right? And that's what the futures markets are like, right? You go after the biggest and the best. You should have no fear. Okay, once this webinar is done, part of my live stream, you'll learn, right? And we go over all these different processes. And I tell you, I'm doing this webinar because I feel if you follow this path, these sequences, I believe in my heart, or else I wouldn't be here, that you, with the work put in, asking the questions, practicing, learning, I believe, and trading the right patterns, the right setups that repeat themselves on a daily basis, that you could achieve your goal for one, financial freedom, and to be able to help change your life. All right. Okay. So again, a futures market, okay, is basically exactly the definition here that I explained, right? Where you can then look at the market in many different ways. You look at the market in trading where investors can buy and sell futures contracts, okay? One party agrees to buy a given quantity of securities or commodities and take delivery on a certain date. When you're trading the markets, nobody's really doing that. Now, I mean, like the farmers, like I said, or the big oil producers will take delivery of crude oil, you know, like, for example, I know I'm sounding a little crazy and funny, but during the March of 2020, when oil was negative $40 a barrel, negative 40, that meant that they were paying you to have oil shipped to you. I said to my kids, Daddy's not filling up the pool this year. I'm going to try to buy, you know, I don't know, 2 barrels of oil, which is, you know, 20,000 gallons. I think it's like, well, maybe 1 barrel of oil is like 20,000 gallons. I'm going to fill the pool up with oil because they were paying me to take delivery. But the CFTC was not allowing people to have open positions. You only a liquefying position. So basically, that scenario was where I'd never seen it in my entire life, where you actually were being paid, if they allowed you to take physical delivery of oil. So basically what I'm teaching here is that a lot of, again, like I told you earlier, futures contracts in the early 30s were meant for the third party to be able, oh, we got bells here from, where the third party was actually, like, if you're a corn grower, like I stated, and you have a great harvest, and corn's at $2.50 a bushel, you'll just sell whatever amount of bushels that you have acreage. Sorry about these bells. And then they would lock it in, and then they would deliver based upon the time the contract came due, whether it's an August or September or a July contract. Once that contract date came, the farmer then would have to sell that equal amount of bushels, the amount of contracts sold, to lock it in. If there's a drought, for argument's sake, and they happen in the Midwest, right, that these farmers then would try to buy futures contracts, okay, to make that delivery. Now, because there's a drought, what would happen to the price of corn? Corn would go up, right? And then they would have to start scrambling and pay for it. And they could even lose, because they may be selling corn at $3.30 a bushel, but they could be buying at $3.50, $3.90, $4 a bushel just to make that delivery to that producer, right? So again, basically the futures markets, okay, were really designed for that purpose. And then a lot of wise people and smart people decided to create index options, right? Index futures, commodity futures, right? financial futures like the 30-year bonds, gold futures, silver futures, right? All right. Then futures on Forex, index futures, like I said. So if you look here, okay, the futures contracts, like I stated, could be index futures, stock futures, commodity futures, currency futures, interest rates futures, and or even volatility futures, right? So again, but what we focus here in our live stream each and every day, we look at index futures, the S&P and NASDAQ futures. We do have people who trade the Dow futures and the Russell futures, okay? We look at gold futures. People use my software, you trading silver futures. We look at oil futures, and we look at the financial futures like the 30-year bonds. So these futures, to me, represent, again, the whole scope of the markets. I don't want to look at, if you're looking at the NASDAQ and S&P futures, to me, that's a lot. I have people who are now trained and who use my software in the YMs, which is the Dow futures, and the RTYs, which is the Russell futures, the silver futures. I know people who just trade silver using the software that have been with me for many, many years. But again, we focus primarily on our live stream on index futures, on the S&P and NASDAQ futures. So again, it's really important to understand the movement on the futures market. I'm going to get into that right now, right? So we're going to take the S&P futures, for example. All right. So the S&P futures, okay, has two ways to trade. I actually was with the head of the CME on his birthday in Chicago, and he was so excited about coming out with the Micro E-mini future. Now, the Micro E-mini future is another product that the CME came out with, because the CME had hundreds of thousands of people around the world using, on the CME website, was called a simulator. They were just paper trading. But the CME decided, you know, I want to try to get these people off the simulator and give them the ability to learn how to trade real money in real markets, but where it doesn't affect them, God forbid they lose. So they came out with a micro E-mini, all right? And if the S&P futures moves 1 point, so right now, if the S&Ps went from 37 to 3701, it's $5. If the S&Ps go from 3700 to 3706, you made $30 on one contract. So you can see here, basically, an E-mini, which is the next step. And I recommend, and I'm going to go over this, how people go from paper trading to micros to the S&P E-mini futures contracts. And there's reasons why you do this, and I'm going to get into this a little later in the webinar. But the most important thing, right, is to understand the importance. I'm just sticking to the S&P futures. You could look up like the NASDAQ futures. Okay, the NASDAQ futures moves 1 point, it's $20. The YMs, which is the Dow futures, the Russell futures, they all have different increments, right? Gold moves in $10 increments, oil moves in penny increments, the 30-year bonds move in 64ths, okay, 30 seconds, sorry, 30 seconds, okay? So what you really need to understand, and why I don't want to complicate things, I want to keep it as simple as possible. If looking at the S&P futures, right? If you take one S&P future, not the micros now, one S&P future, all right, it's $12.50 per tick, or $50 per handle. What the hell is a handle, right? A handle is, if they, that's what they called it out in Chicago when they were trading the big ones, the big S&P contracts in the open outcry days on the Florida CME. If the S&Ps go from 3706 to 3705, they drop one handle. If the S&P futures drop from 3706 to 3703, they drop 3 handles, right? So a lot of times you'll hear me say the word handle, okay, in the live stream, because it's just so natural for me after close to 39 years in the industry. Remember, I don't teach the conventional way. I teach a very unconventional way, very high level, because I believe I don't want to waste your time. I want to be able to teach you at a high level and ask as many questions as you want during the, during the Discord, right? During the chat period. And mostly everybody gets it like this because it's constant repetition, right? So for example, if you bought one micro at 3,700, right, and you sold one micro up 2 points or 2 handles, you have gained a gross amount of $10. Now, it doesn't seem like a lot, right? And then after fees, maybe you made about 7, right? Commissions and exchange fees. But you don't need the $25,000 in your account to day trade like you need with stocks. If you have $1,000 in your account and your goal is to make $50 a day or $100 a day, I believe with our methodologies, with our software, with me teaching the strategies, it could be attained, right? So what you really want to be able to do is to understand that you get a lot of great leverage with trading futures. So when and I'm going to get into margin in the next couple of slides. So if you bought one S&P future at 3,700, the big one now, the one up from the micro, and you sold it at 3,705, you made $50 times 5 is $250. Now, again, a lot of you who are on this know all this already, and I get it, but I have to cover all the DNAs from people who have never traded futures in their entire life to people who are very sophisticated, making good money trading with me in the live stream each and every day. But I have to do this because I want so many people in the world to really understand how to trade futures and the understanding of it. You know, I'm not the type of guy that's going to give you just some generic teachings during the day where you can go to Investopedia and look up all this nonsense, right? No, we're going to teach you the right way throughout the day, the right strategies, the terminologies, understanding the charts, and it's constant, like I keep saying, it's constant repetition and visualization. So basically, this slide right here is really it's just for the S&P futures. Again, I could have other slides for the NASDAQ futures, for the Russell, for gold, for silver, for oil, for the 30-year bonds, for the Dow futures. I'm just showing you an example here of what it costs, right? If you were to make a profit on one S&P future, and if you bought one micro, the difference, okay? So if you bought one micro and you sold it up 3 points or 3 handles, you made $15 gross. Again, not counting in exchange fees and not counting in the commission from your broker. All right. All right. The next thing I want everybody to realize is that there are 3 sessions in the world. There's a US session, there's the Tokyo session, and then the European session. So futures trade from 6 o'clock Sunday night to 5 o'clock on Friday, they close, right? So they really trade, you know, almost 6 days a week, right? And they're closed from Friday night all day Saturday, and they reopen again on Sunday. So the great thing about futures trading is the fact that, yes, you could trade if you have some brokers, you know, post market during the European European session. You could trade the ETFs, you could trade various different stocks, but there's really no great liquidity. The one thing you got to be careful about when you're trading futures or any commodity or index future or any financial future during the Tokyo or European session is what? You got to know the news coming out during those sessions. So you can be trading the S&P futures during the European session, as I have a lot of people from, from around the world that do. And guess what? They got to be concerned about, is any news coming out in England on the GDP number, retail sales, consumer confidence, new home sales. You got to worry about all those different factors during those sessions, right? So again, there are 3 sessions: the US session, the Tokyo session, and then the European session, right? Okay, so again, we've gone now from a beginner aspect to understanding futures to really gaining. Now we're going to start stepping it up a little bit, right? So the next important process is you have to have the right setup. I can't tell you how many people think they could just trade on a laptop. Now, if you trade on a laptop, you can't have the right setup. Now, a lot of you, there's 2 ways to trade. You could trade from your phone, okay? You could trade from your desktop. You could trade from your iPad. You could trade from a laptop. I mean, I'm talking about the fact that you need, in my personal opinion, you need the right setup. And what's the right setup, right? You need to have the right amount of screens in front of you if you can, right? Because you want the charts up during the live market hours. Yes, I get it. Some of you are beginners. Some of you are in college. Some of you are working. Some of you, could do this part-time, full-time, because some of you can only do this at night. I get that. This is not geared just to the person who sits home and is doing this full-time, right? The right setup is, if you're listening to me on either Silver Pro, Gold Pro, or Platinum Pro, and you hear, and once you understand what I'm doing and you want to start executing, whether you have an app that allows you to execute on your phone, if you go and you're executing at home, it's important to have the right setup. Obviously, if you're one of those individuals that has a full-time job and can't really trade like that because you're working or you're in school or whatever, you don't have the time, well, eventually you're going to need the right setup in order to really do this efficiently in the right way. Not to say you can't trade off your phone during the live stream, and I have a lot of people who do that, by the way, a lot of people who just listen to my call, and when they hear me say, I know this pattern, or this pattern, is a correlation pattern, and this next pullback should be a 9-10 buy, which means a very strong buy on the work that we have right in front of us. And then they can start trading the markets. I have so many people who do that. So the right setup for me is, having the right screens in front of you. But if you can't do that, then obviously you can do it at home and then go back and look at the trades that you're executing off your phone, and then always have the charts up, because then you'll be able to say, wow, and look at it. Well, I understand what Steve's teaching now. I can see it visually. To be able to trade the S&P futures without having the charts, it's really something that, and if you have them at home, then you can always go back and relate and then understand it, because eventually, like I had so many people that say to me, I want to quit my job because I'm doing so well, and I can't give that recommendation. I can't give recommendations, period. But I just think that by understanding the strategies, the patterns, the psychology and mindset of what we're teaching here, I believe everybody can do extremely well. Now, with that being said, so for me, having the right setup, now I have 39 screens here. I don't expect everybody to have 39 screens in their home, okay? I have 39 screens because I was given a gift and I can see things like this, and I'm being able to call the market direction. So I'm actually doing the work for you, because you may not have the ability to have, 6 screens, 4 screens, maybe only have 2 screens, but at least I'm giving you the idea through the telestrator. I'm teaching you through the telestrator. I'm explaining to you what's going on, why this pattern should work out, why we have a cell divergence, why we have a correlation, why we have a disconnect. And I'm going to get into all that in the next couple of slides. So having the right setup, okay, even if you're trading from your home, you should have the charts uploaded at home, okay, to be able then to go back and look at why at 11:20 in the morning I was calling a buy pattern off the 5-minute time frame after they correlated, right? And you go back and you say, okay, I bought these 3 micros, I bought these 4 micros, I bought 3 minis, and bam, they ran 5, 6, 7 points. I just made myself $350, $400, $500 on that trade, right? So again, the right setup, okay? And I have people who just listen all day long because they're getting acclimated to what? The terminology, the terms, right? The why I'm calling these strategies out, why it's important to listen. As my father once said to me, one of the greatest gifts in life is the ability to listen, right? So having the right setup eventually comes in time. I know people who have 2 screens and now have 6 screens, who are now, you know, they see the importance of how I'm looking at the markets and why it's important to have that many screens open at any given time. If you're able to sit in front of a desktop each and every day, right? So again, that to me is something that, you know, you got to be able to do it right. And again, if you're able to trade from your phone, great. Okay, and have the charts at home so you can always go back and review as well. All right, so the next slide here is so many people are asking me about. I mean, literally, this is probably was the icing on the cake, you know, why I wanted to do this webinar. So this is what's called a price ladder, right? So many people don't really understand what this represents, and a lot of you do, so be patient with me here, okay? Again, for the people who want to learn and people who are beginners, you can't trade futures contracts without this, right? So this is a price ladder. This is from, I believe, from Trading Technologies, but TradeStation has it, E-Trade has it, Trade has it, all the big introducing brokers have it, Schwab has it, they all have them. RJ O'Brien has it, CQG, okay, all the big firms have it. And this gives you the ability, okay, to put orders in the market. The left side here is the buy orders. You can see the orange right here, or the pink, I think it is. It's the bid, the highest bid, and here is the offer. So right here, whatever this is, I can't read it, but it's trading two. This is just a static example. 2138.75. Let's just say it's the S&Ps, right? So it's 38. So it's 38 3/4 bid, offered at 39. So these are the bids, and these are the offers. And you can see to the left here, right here, is how many contracts are offered by sellers on each price point. And these are buyers trying to buy on these price points. Now, it's important to understand that how to execute with this. And this is why I go back, and I'm going to teach you going forward in this webinar, why it's super important to understand how to trade the market and why you need to go and paper trade first, especially if you're a beginner, someone new. You get live market data on your simulator, which is a practice account, and you got to be able to learn how to put orders in, cancel orders, raise your stops, put your offers out, put your bids in as you get executed, put your stop in place and then you want to decide where you want to sell them, you put them up on the way up. As we have a joke in our live stream each and every day, when you're starting to put a position on, or buying and or selling, buy them to go long the market where you hopefully they go higher, or short the market where you hopefully they're going to drop. We always have a saying, hand on the mouse. Hand on the mouse. You cannot trade futures markets and just sit there, put your bids in, put your stop in, and keep your arms folded. I've seen at times our trades last anywhere from 1 minute to 40 minutes on a 5-minute time frame, 1 minute to 24 minutes on a 3-minute. There are times, sometimes on a phenomenal pattern that we'll call, bam, they'll run 20 points or 20 handles in less than 5 minutes. And people are like, whoa, what just happened? Well, you better make sure that you have your offers out there. You'll see it run 20 and drop 10. That's how fast they go at times. Just now we're talking here, within 1 bar here, the S&P futures just right now during live markets right now, just ran 6 handles from low to high, just in this 1 bar. That's how fast it is. So if you bought S&Ps at 01 at 99, 36.99, bam, they're 03, 04, 05 right now. You got to be able to have your offers out there, right? We're going to get into scaling in and scaling out later, okay? And actually there is a 25-minute video that will be sent to you at the end of this webinar, okay? Because I didn't want to run it during, but everyone here will have access to that video of how we scale in and scale out of trade. So this ladder right here is really important. It takes time to learn how to put your orders in, depending on your account size, where you want to put your bids in. Maybe you want to buy some here at 38 3/4. Maybe you want to buy more here at 37 3/4. Maybe you want to buy more here at 36 3/4. Or maybe you buy 38 3/4, you go down to 36 3/4. If you're short, maybe you want to offer some here at 39.5. Okay, maybe you want to offer more at 40.5 or 41.5, right? So this ladder gives you the ability to go click, right? I named a couple people in our live channel click, right? As a personality, we're trying to be really personable with people, and we're trying to make this as fun as possible at times. So I say, okay, click, there you go, boom. You put the orders in, click. You may want to put 2 bids in, 3 bids in, 4 bids in, depending on your account size. Remember, you have to have your stops in place once the orders go in case news comes out, bam, they drop, and then you get stopped out. But that's only if news happens, right? Most of the time, right? So this ladder here explains all the different types of sequences, the amount, the quantity that you're able to choose. You want to trade a 1 lot, a 5 lot, a 10 lot, a 50, 100. You want to clear, okay? You want to be able to see the defaults. You're set at 1. So if you're trading 1 contract, every time you go click, you'll see 1, 1, 1, 1 that you're basically, in. I would say that probably every ladder system that I've seen has a liquidate button, meaning boom, sell all, right? So again, this is just a price ladder from Trading Technologies, and they have different packages, but most of the firms that we talk about, which are in the webinar, which I get to, will have their own trading ladder. But it's important really to understand how to execute and why this is important. I mean, for example, like a company like TradeStation has this ladder system to trade stocks with, right? Some brokers have where you have to type it out, which in markets like today are very difficult because of the fact of the volatility in the market. Some firms have hotkeys. I personally traded beginning by typing orders in before the ladder system came out. Then I went right into the ladder system on trading stocks and futures markets, right? So again, this is the real importance of understanding how to use this technology for execution in trading the futures market. All right. So the next key point that is really super important, and I must have spoke to dozens and dozens of people over the weekend, is choosing the right broker for futures. And these are a list of some of them, right? Interactive Broker, Ninja, Optimus, Tradevate, TradeStation, GFF, TD Ameritrade. Now, all of them have their own ladder system, right? From the prior slide. But every firm is different because of the margin requirements. Interactive Broker, I know, has a high margin requirement. Now, what's a margin, right? Ninja has, since Ninja's now a broker dealer, an introducing broker. Optimus Future is a introducing broker. Tradevate was acquired by Ninja. TradeStation is a member firm. GFF is an introducing broker. TD Ameritrade is a member firm. Member firm does stocks, futures, options. There's a whole gamut of assets where GFF and Optimus Futures well, Tradevate used to be just where they were just trade futures contracts. So, for example, I was talking to some people, and TradeStation, if you're trading one S&P future, I believe that their margin is $1,900 per contract. So if you have $10,000 in your account, the most you can do, okay, is 5 contracts in the S&P futures. If you want to trade a micro, I believe the margin requirement at TradeStation is $500. Now, to some people, that's great. They want the higher margin. That's fine, right? So if you traded 10 micros, that's $5,000 of the $10,000 that you have in your account. It's just margin. But if you look at like Optimus Futures, Tradevate, GFF, they have lower margin. And I think Ninja might too. I'm not sure. But they have, like, for example, those 3, Optimus, Tradevate, and GFF, for argument's sake, and there's so many more, okay? Their margin requirements are $500 per contract for the S&P futures. So if you did 10 S&P futures, right, it's $5,000. If you did a micro, it's $50 per contract. So you could do 10 micros on the S&P futures for Optimus Futures, and it'd be $500. Where TradeStation, I believe it's $500. So it's $5,000. You go from 500 to 5,000. A lot of people don't have that money. Some people open the accounts with $2,000, $3,000, $4,000, $5,000. Some open up with 10, 50, 100,000. Everybody's different. But for those of you who I spoke to over the weekend, there's like, well, you know, I only have like $4,000 in my account, 5,000, but I really want to learn. Then you have to learn, and you have to switch to a broker that could accommodate you, because you go from paper trading again to micros, right, to the big ones. You want low margin. And the firms, I don't know what Ninjas is. I know that let's see, TD Ameritrade, I heard from somebody, I don't know if it's true or not, I didn't do the research. I think it was $12,000 or $15,000 for one S&P contract. And again, they have the right as a firm during high volatile times to raise the margin, okay? And I believe that Optimus Futures, GFF, and Tradevate pretty much keep the margin even during volatile times the same, right? So again, choosing the right broker is very, very important to the amount of money that you want to open an account to trade, because you can't go, right, open up an account at TradeStation for $2,000 and buy one S&P future at $1,900. God forbid the trade goes against you by $100, you're going to get a liquidation, boom, by TradeStation. You'll have no margin to buy more than one contract. And like I tell people, what we emphasize here is you cannot do single lot entries. What's a single lot entry? You can't buy something and watch it drop $4, okay, and not buy more if we're looking to buy in that pattern, in that range, which I'll go over later, right? It happened on Friday. Somebody bought a contract at 96, watched it go down, right? 10, and then sold it, right? And then rallied, 30, right? So it was within the range, but then the pattern was beautiful pattern. It pulled in a little deeper than we had liked, okay? And didn't get stopped out, okay? And then it shot up like 25 or 30 points from that point on. So to do single lot entries, so now, for example, if that person only had $2,000 and he was at TradeStation, you would only be able to buy one contract. However, if that person was at TradeStation and you know that you're now at $500 margin for a micro, then you could do 3 lot entries. But if you're at Optimus Futures, GFF, and a Trade-Evate, right? I don't know Interactive Brokers, I think they're just equal to TradeStation. Now you could buy 5, 6, 7 lots, 10 lots on the micros, right? 10 lots on the micros, like I said, with $500 on the S&P futures. If you have $3,000 in your account, you could easily buy 4 contracts without going over margin with the firms I just mentioned. So you have to find the right broker that fits your DNA. And that's why it's important that I mention this here and now. All right. Okay. So I tell people that there are 4 parts. There are 4 parts to what we do each and every day. And I'm going to go over parts 1 and 2, but 3 and 4, I have my own terminology. Terminologies that you've never heard before, right? Double blues, correlations, disconnects. So I have a list of them right here, okay? And these are yours to understand, and I never deviate from these words or these phrases each and every day. I say the same thing over and over again. You think, like, you ever see the movie Groundhog Day, where Bill Murray lives the same day over and over and over and over again, right? Well, guess what? That's what we do. I get it so embedded in your brain that you just know exactly, when you see it, you know exactly what I'm saying. If you think you're going to get this in 3 days, you're crazy. I'm telling you right now. If you put the work in, you'll get it within 10 days. If you apply yourself, come to the live stream, in and out, listen, watch, learn, you'll get this. I don't make it hard. You, like the passion that I have, you have to have the same passion to want to learn, the same passion to want to achieve, to be able to be great in trading the futures markets. So here are all the different terminologies that we have, right? Now, alongside the terminologies, also we have strategies, right? So what do we have? What do we look at? We look for trends. We look for buy and sell reversals. We look for buy and sell divergences. But guess what? Again, I don't make it hard. You can't just have a trend up and or down without having buy and sell divergences. You can't have a buy reversal or a sell reversal without having buy and sell divergences as well. So 1, trends always has to have, number 3, buy and sell divergences with you. 2, buy and or sell reversals, which means we're down in the morning, we reverse up. We're up in the morning, we're down, or up in the afternoon, and we reverse in the afternoon down. But then you'll get buy and sell divergences right after that. And I've told this to people since the beginning of me doing this. If you can master the art of divergences, which we try to achieve each and every day, you have mastered the art of trading, because divergences are significantly powerful trading opportunities. If you can identify it, then guess what? you've mastered the art of trading, in my opinion. So you have your terminologies here. They're probably 95% of what I say, outside of all the crazy antics that I say during the day. But then now coming to the live stream, you'll see the buy reversals. You'll see the sell reversals. You'll see the divergence strategies. You'll see the correlation strategies. You'll see the disconnect strategies, right? And again, we don't make it hard. We do not make it hard. So again, let me go now into a strategy that we call a correlation strategy. So remember, the S&P futures, or the index futures and commodity futures and financial futures, trade nearly 24 hours in a day, right? From Sunday to Friday, right? The way I look at the stocks, okay, during the US session, I look at the stock market from 9:30 to 4. My software, I don't plug in pre-market or post-market data. I only look from 9:30 to 4. My research has shown me that when they correlate, right? So for example, when the S&P futures correlate, right, with the underlying ETF, you better be going in that direction. So this example here is a strategy using my software of a buy correlation. So what am I looking at here, right? I'm looking at the fact that, again, I look at the 15-minute time frame, look at the 5-minute time frame. I also look at the 3-minute time frame on a separate chart. And at times I do look at the 30-minute and the hourly. So when it comes to the index futures, I do look at 5 different time frames. But when it comes to correlation strategies, I look at both the 15-minute and the 5-minute. If you see here, and I'm going to go over all this, right? Indicator 4 is my own predictive analytics, right? My predictive analytics study, right? And you can see here, blue over orange meant that now we have a reversal in the trend. That means we're getting a buy reversal. But not only do we get a buy reversal on the 15-minute time frame, it also correlated with the 5-minute time frame. So the 15-minute time frame has now correlated to a buy with the 5. Okay, stop right there. Now I go to the next slide. You can see here at 2:15, so we got the buy reversal here at 1:15. An hour later, the underlying ETF, the spiders, we got the buy reversal. So now the underlying ETF not only correlated right here on the 15-minute time frame with the 5-minute time frame, it also correlated with the S&P futures. So you'll hear me say this as a double blue buy, which is in the terminology sheet. But 95% of the time, you'll hear me say, guess what? S spiders just correlated with the S&P futures. We're going to use the smaller time frame, the 5-minute. Let's look for pullback to get long. I wrote this strategy. I've taught this to the biggest and the best hedge fund guys, okay? And now I want to teach all of you. So now the 5-minute time frame, we got this beautiful pullback on my oscillator 3, which is my overbought, oversold oscillator. The S&P futures pulled in right here to the 42, maybe 45 level. It looks like here, 42, 45 and a half. And then the trades, like I told you, last anywhere from 1 to 8 bars. So let's count. 1, 2, 3, 4, 5, 6, 7, 8. Now 8, I'm not counting 8. I'm usually out between 5 and 6. Okay, on a great pattern like this, especially I knew this pattern was going to make a new high. Okay, so the S&P futures ran almost 40 points here. So if you held one contract, that's $2,000. Now I'm not saying this happens every single day, but the volatility is there. where we have multiple trades. Okay, this is a phenomenal strategy. So now you'll hear me saying during the live stream that the spiders on the S&P futures just correlated with the futures market, or the continuous contract, which is another terminology that we use for the futures market. We're going to look for the first pullback on the 5-minute time frame. We got the deep oversold, bam, right back up. Now, you think I'm just showing this to you to make it look good or look pretty, and oh, well, this is just a perfect scenario. No, these strategies that I'm teaching, okay, and I'll get more in depth why this strategy was going to make a new high. And I can say, well, you know, indicator 1, the MACDs are crossing up from below the pivot, which gives it even more power than if the MACDs were crossing up from above the pivot. And again, I don't want to complicate you on this webinar, right? So that's why so many videos, I produce video after video after video. I put it into our gold package, into our platinum package, because again, it's constant repetition, right? But here is a beautiful monster pattern. Last Friday, we got a monster sell at 9:45. We got the first bounce to get short. What's a bounce? That meant that the market rallied. We get right into our range to get short. S&P futures dropped from 93 down to 58. Monster short, monster short. Okay. So again, all you really need to do is to trade 4 to 6 times a day, or even 2 to 4 times. I have people say, hey, when I make my 5 handles, 5 points, I'm done for the day. That's great. You set goals for yourself, like I did. My goal, right, was to make $100 a day after I met the guy on the COMEX who told me he was going to make 100 when he was a clerk, making $100 a day. He just got married. He was having a baby. He was a local in the gold pit, looking up towards everybody in the crowd in the open outcry days. And his goal was to make $100 a day or lose 100 and stop. And he set a 1-month goal for himself. Well, guess what I did? I said, I'm not waiting no freaking month. I'm going to make $100 a day every week. And then next week, I'm going to go to 200, then 300, then 400, then 500, then 600, and exponentially keep growing. And I achieved that. I achieved that. I achieved that. Okay. Every day, my goal was to leave in the green. Okay. To leave in the green. So this is a correlation strategy, again, using my software. And here you can see the NASDAQ, the Qs. Okay. You got the buy reversal here at 230. And the NASDAQ futures went positive the exact same time as the S&P futures. So now, here's the pullback. This is a buy divergence here. Okay, even though the algorithm went negative, this is a buy divergence versus a correlation, right? So this is another strategy, but the NASDAQ futures, beautiful setup. You can see what this thing did. This thing exploded, the Qs, right? They rallied almost $2. That's a monster move in the NASDAQ. So again, using the software, I was able to do what here? Identify market direction, identify strategy, right? Be on the, like I said, identify the market direction, be on the right side of the market. I mean, there's no way in God's creation I'm selling S&P futures here. Can you imagine the guy who sold 42.45s and is now trading at 42.70, 42.80? Forget it. So we want consistency. We want to be on the right side of the market. We want to be able to understand why this strategy is powerful, because the math on both the underlying ETF, which is an SPY, and the math on the S&P futures, which trades longer because it has more tick data, because it trades nearly 24 hours a day, correlated. And when they correlate like this, especially when these MACDs are crossing up from, you see me circle it, from below the pivot, the odds are 93%, 94% of the time that you're going to make a new high after this pullback, and right here was the new high. This is a strategy. Now, not going to spend 5 hours going over every strategy we have. That's what the live channel is about. And I'm telling you, I got people in the Discord blasting out, hey Steve, look at the buy reversal in NVIDIA, look at the sell divergence in Apple, look at the buy reversal in Microsoft. Yeah, right. Look at the sell divergence on the euro dollar. Okay, I know this is a futures webinar, but I'm just telling you the way people are getting it and they're seeing it. You cannot trade the markets without having this technology. Okay. All right. So again, understanding this here. Okay. So where do you get these charts that I have? Right on TradeEZ, you go on my TradeEZ site, you go to SK overlay, and they're available on Ninja, TradingView, TradeStation, and Sigma 360. Now, it is important, okay, that when you're trading futures markets, you definitely need the underlying ETF, especially during the US session. TradeStation and TradingView offer that. Ninja, I heard, offers it, but somehow I heard that it was a little complicated how to get the market data for equities. I heard some people it's not a problem. Some people say it's a problem. I'm just being transparent. Sigma 360, you just get the equity, the futures data. Now that's great if you want to trade the Tokyo or European session. Okay. So again, the Sigma 360 platform just offers just the futures markets, but I'm giving you the option. But if you're going to trade the US session, it is imperative to have the underlying data, right? If you're setting up your charts the right way, you want the spiders, you want the spider chart on the 5 and the 15, you want the S&P futures, the futures market side by side. So you can see how these correlations I just showed you set up. Okay. All right. So I want to talk to you because I can't tell you, this is so important, the risk management, right? To be able to really have the discipline. If I tell you this week, I must have heard from at least a half a dozen people, okay? People I've come to know, and I'm not never mention name or anything like that, but how they're trading without stops. You cannot trade the market without stops. Can you get in a car with your 5-year-old son and drive on a highway without a brakes? That's what it's like. Could you be that irresponsible to get in a car with someone that you love, drive from here to there, side roads, highway, back on the side, without braking? How are you going to come to a red light? That's what this is like. You're being irresponsible by trading the markets without having stops. Stop orders protect you, preservation of capital in case a trade goes against you. You don't know, we're not bigger than the market. If I knew the numbers to the Powerball, I wouldn't be here, right? Do I know that, you know, at 11:05 that some news is going to come out that could reverse? One time I was long, I think 150 or 100 S&P futures, right? I was up good money. It was ticking where I was going to try to sell them. I had my stop in place, and then bam, 1 o'clock, boom. I went from a great gain to losing, right? $25,000. Why? Because news came out that Google's earnings were released at 1 o'clock that day when they were supposed to be released at 5 o'clock. They were leaked early, or the accounting firm. Now, what am I going to do? Go sue the accounting firm that they came out at 1 o'clock? I was so livid, I threw a chair, right? And so, but I had preservation. I took my loss. It was out of my, but did I know that was going to happen? If I didn't have it, okay, they bounced a little bit, then dropped even more. So thank God I had my stop in place. If you're talking to a professional who, if I'm willing to adhere to stops, you as a beginner, novice, someone who's learning, should even want to put stops in for preservation of capital. It's imperative to have this. I can't even begin to tell you the importance of this, okay? So please, please, don't give me an aneurysm, all right? Don't give me a heart attack. I didn't have my stop in place, okay? I had someone, loving and endearing person that I know, watch the S&P futures because they did not put a stop in on their short, watch it rally about 400 points against them. Thank God, thank God, thank God, thank God. Thank God, thank God, thank God the market dropped. Okay, thank God the market dropped. Got to trade with stops. You got to trade with stops. Okay, please. Stop orders, preservation of capital. Okay, you need to have stops. Okay, because if you don't have stops, it's just going to really destroy you, and you could blow up your account. Because without stops, it really could be detrimental. And why risk the money to that level? All right. So you hear me say over and over to all of you during the live stream, people that come to meet, okay, hey, I have a methodology here. You open up a brokerage account, right, with one of the firms or any of the firm, E-Trade, Schwab, whoever, you got to do your due diligence. Find the right margin that fits your needs, right? And then what do I tell you the next steps are? You paper trade. For those of you who are beginners, you got to learn how to put the orders on the ladder. You got to be able to learn how to scale in, which again, at the end of the day, you're going to get 2 additional pieces, links. One of phenomenal correlation, right? To really understand the strategy. And again, you'll see more of these as you come into the live stream, and you'll see how these correlation strategies really are so powerful, up and or down. And then the other link you're going to be getting at the end of this, because it's really important. It's a 24-minute video. Take your time, listen. We have what's called a range. We have a buy range or a sell range to go short. And then we look for the ability, how to scale in, how to scale out. Because everybody's asking me for that one as well. All right, so I produced a 24-minute video, Albert and myself, and that is a bonus to you to be able to watch. Not only will you get this webinar, you'll also have the ability to have that scaling in and that correlation video as well. But now let's take this next slide here, paper trading, right? You want to be able, here's the pros and cons. Imagine just opening an account, funding it, and bam, just start trading. Are you crazy? Especially if you're new, especially if you're a beginner? No. Now, yeah, I was crazy. I had $3,000. I went right into the options market like a hoople, right? But that's not what this is about. This is about one thing and one thing only, right? This is about learning how to be able to paper trade. You fund an account. You ask the broker, introducing broker or member firm, hey, I want live market data for my simulator, and they'll accommodate you. and then you want to be able to start practicing on the ladder, paper trading. Like a couple of people this week said, hey, Stevie, I made $500 every single day. I made $1,000 a day. Great. When do you think I'm ready? I can't tell you that. You have to be ready yourself to start trading real money. Remember, I get it. With paper money, it's a lot different than trading your own money. Why? Because of your emotions are the worst thing you can have when you're trading. You can't have emotions when you're trading. I swear to you, I'm telling you this. Not that I'm like immune from this, or I used to come in every single day and not even think about anything. I never read the paper. I just have my bowl of cereal, my cup of coffee. I rinsed out my bowl, I rinsed out my mug, and I sat in my chair and boom, I just started. I never thought, as the old saying is, when you think, you stink, right? You gotta just be natural in your approach. And paper trading gives you that confidence of being able to practice, putting orders in, scaling, being able to put the orders in, clicking, watch them get executed. Now put your offers out, raise your stops, which is now which you'll see in the scaling in and out video. Okay, but paper trading is the most important step. It's like leaning a ladder against a house. There's 10 steps. You want to change that light bulb. You're not going to take a 20-step run and try to leap to get to the 8th step to get to that ladder to change that light bulb. You lean the ladder against the house. You take the first step, the second step, the third step, the fourth step, ultimately up to the 7th step where you can reach, 8th step where you can reach and get that light bulb and you can change that light bulb. This is the same process. You want to be able to have the sequence of events. You paper trade, then you go to micros, and then you go into the big ones. Now, some people this week said to me, Stevie, I get it, but I traded futures before. Great. I can't tell you what to do. This is the way I would do it, right? However, they said, you know what? I like what you're saying. Guess what? I'm going to go from paper trading to the big ones. That's great. If that's what you want to do, then do it because you have some experience in the futures markets. But guess what? I can only tell you as a coach, mentor, that this is a process that I would take, right? So what's the next thing that we look at here? Okay, is to be able to scale in and scale out of a trade. Okay, again, there is a 24-minute video that will be sent to you at the end of this webinar, alongside this webinar, because it's recorded and everybody will get a copy of it. Okay, so for example, let's say you bought an S&P future. Okay, and again, you can see here, you're buying one here. Okay, you're buying one here, you're buying another one here. Okay, you're able to scale in and scale out of a trade. Okay, so now you have your stop in place, right? You bought here, you bought here. Okay, it's trading up. Okay, you raise your stops along the way, and here you as it's trading upward. So if I give a range, look to buy S&Ps at right here, 131. This is just an example, down to 130, a 10-point range. You may say, okay, I'm going to go every 3 points. You may go every point. You may go every 2 points, every 2.5 points. You may say, I'm going to go 3 in. I'm going to go every 3 points, and maybe I'll only get filled on 2. You may say, I'm going to buy one here, right, at 131. I'm going to buy 2 more at 130.08. I'm going to buy 3 more at 130.06. I'm going to buy 4 more at 130.40. And use a stop at 1295 or 1290. Everybody has different ways of doing it. There's no right and there's no wrong. But again, watch this video that I worked with Albert on. And this, I feel, will open your eyes on how we look to scale in and scale out of a trade, whether you're long and or short. All right. So again, very big, because if you hear me say a range, that means I'm looking based upon the strategy. Okay, so if you go back here, for example, on the S&P futures right here, okay, let's say, for example, my range on the S&Ps were 42.48 down to 42.38. So I gave a 10-point or a 10-handle range to get long on this strategy. So let's say you bought 48s, you bought 46s, the low is 45.5, right? Let's say you bought 2 entries. You went every 2. But on this strategy, some people I know probably bought every handle. But let's just say you bought 2 entries, right? So now your average price is you're long 2 contracts at 42.47. 48.46, your average price is 47. You bought 2 contracts. It trades to 50. Maybe you sell one. You raise your stop to 47. Now it goes to 52.53. You raise your stop to 51. Or you sell them, It goes to 55.56. You raise the stop to 53.54, or you just kick them out. Either way, now you're playing with the house's money. Now you're just in la la land. Everything's working great. Okay, you're up good money. You probably met your target for the day already. Which I got to tell you, there's no greater joy when I see the Discord blows up and say, I met my target for the day. I'm stopping. Right? I'll upgrade my target next week. And guess what? Now I'm paper trading. Oh my God, my heart stops when I hear that. Right? My heart stops when I hear that. So again, maybe on this pattern here, you would only gotten filled twice. There are some times when a pattern that we're calling, maybe it gets filled 3-4 times. Maybe there's times like on Friday, we only got filled once. I think 3 times the price action only entered into our range once and then ripped, 5 or 10. Even if you bought 1 contract and it on a micro and it ran, let's just say 5 points, is $25 gross. But if you bought 1 S&P future, you made $250 gross, right? So again, it's really important, like I said, to understand the scaling in and the scaling out process, right? And again, that video will be given to you. I can't emphasize again, like I keep saying to everybody, about using stops, preservation of capital. You got to be able to learn how to apply stops. If I hear one more person that tells me that they're trading without using stops, I'm just going to put my head in a microwave. I can't take it. You can't do this and be so irresponsible to yourself. You've worked hard enough to save the money to be able to do this now trade. Again, I don't want to keep repeating myself. It's like driving a car with having brakes on. You just can't do it. And that's all I'm going to have to say about that. All right. So with that, this concludes the webinar. As you know, I'm there for everybody. I give out my personal cell phone from around the world, 914-500-7484. I can't tell you how many times my phone blows up with text messages from people all around the world. I do get to everybody. I know it may not seem scalable, but on Sunday, somebody or Saturday, somebody texts me, I call them right back. I had, believe it or not, 15 minutes of spare time. The guy said, I can't believe you're calling me back. I said, why? Why not? I'm here. If I give him my phone number, I'm not just giving it to a marketing company. I'm here to help you. I want you here. You're reaching out to me. Well, I'm here to help you. All right. So I think there's one question here from Miles. What are the difficulties for trading futures when the market is not volatile? Well, there are times when the markets are very, very slow, Miles, but the bottom line is that the strategies will repeat themselves. And we wait for the right strategies to kick in. Right now, we're on Monday on a national holiday, and the S&P futures are trading live, as is the NASDAQ, as is oil, as is the 30-year bonds, as in gold. And I can't tell you, yes, the volume may not be there, okay? The volume right now is just on the S&P futures, very, very, they're not even a couple hundred, okay? And probably just in this 1 hour time period, there were probably four great strategies just in this 1 hour, on the S&P futures, believe it or not, on a slow day. When I say kicking them out, Ben, that means exit. Hey, like I know, for example, there was a time last week, probably the first time I said this, hey, S&Ps are getting up here, kick them out. I would look to kick them out. Kick them out means sell them. Now, that's the first time I said kick them out, and I almost got crucified for it because it was a new term. It just came out of nowhere, okay? It's something I used to say when I would say, Ernie, kick them out, sell my compact, kick them out, like that, right? But I went right a minute later, not even 10 seconds later, I said, I would look to sell them here. So then I had to explain what kicking them out is, okay? So I hope you understand that. Absolutely, FT. If you're a beginner, okay, like right now, I would have had a short at 09 on the S&Ps. They just dropped 2. I would have said, look to cover. You would have made $100 on a big one. So what? But if you're just beginning to learn, you made $10. You do that over and over again, and then you start increasing the micros. Eventually, I believe that you'll really have great results. All right. So I hope I answered these 3 questions. Let's see, in the chat. Oh my Lord. There's 100. I don't even know where to begin. Okay. All right. Good morning, all. Let's see here. Let's see. Does anybody have any questions here? I mean, there's a chat going on, but I don't see really any. I only have 3 questions here.
Hey, Steve, maybe,
yeah,
if you go down to scroll down to the bottom of the chat, there's more meatier questions there for you.
I don't see it. Albert, you want to help me here? I don't see it.
Go right down the end and then go back.
I only see 3, Ashley, here.
Yeah, they're in the Q&A. I think a lot of people are putting them in the chat as well for you.
You want me to go to chat?
Yeah, please. Thank you.
Oh, I see there's a major difference between the Platinum and the Pro. Can you? Yeah, so the Platinum Pro is a nanosecond company called Millicast, where you can actually hear me speak like you're standing right next to me, right? The lower price Platinum is a YouTube, and it's anywhere between 3 and 5 or 8 seconds delay, depending on the YouTube servers. So I think the better of the 2 is a Platinum Pro, right? Because you also can get the audio on your phones as well. Okay. So what is the best way to learn the layout and the indicators? Great question. 1, getting the charts, whether it's TradingView, TradeStation, or Ninja. Okay. And then 2, coming to the live channel and learning the strategies and learning the charts. Actually, there's another segment here that I want to do. Can you ask Joe if I could get the charts up here? Let's see here. One more, Steve, regarding the question, when you refer to the 5 and the 15-3 high, are we looking at a time frame in history so I'm looking at time frames, a 3-minute, a 5-minute, and a 15-minute time frame. Okay, what does cover mean? That's a great one. Cover means if you're short, I would look to cover the short. You're looking to cover the short, okay? If you're long, if you own it, I would be looking to sell. So I don't say if you're long, look to cover the long. When you're short, let's say you're short S&P futures at 37.09, now it's trading 37.06. I would say I would look to cover the short here at 37.06. Let me see if there's a couple more. Steve, you teach equity on small cap. I mean, you as a mentor. I look at the same 39 names each and every day, but once you learn the strategies and understand the charts, you can apply it on the strategies and understanding the charts on the small caps as well. All right. So I look at the big names like Boeing, Goldman, NVIDIA, Facebook, Meta, Amazon, all 4 ETFs, Apple, Roku, Square, AMD, Micron, the SQQQs, the SDSs, the TZAs, JP Morgan, Oxy, OXY, Goldman, Procter & Gamble. So I look at the same type of names over and over again. But once you learn what I do, it could be applied in the small caps as well. What video that futures are our favorite type of trading? Can you explain why this has been an advantage over stocks and options? Well, again, the reason why I like futures is because of the fact that, you only have 4 price points, right? On the ladder, you have, well, even, a quarter, a half, 3/4 in the figure. So really, if figure to figure between the 2 figures, let's say from 06 to 07, you have 36 1/4, 36 1/2, 36 and 3/4 and the figure. Whereas trading stocks, you have 100 price points due to decimalization, right? And options as well. So I like the futures markets because of the fact that you have less price points. Okay, so I hope I answered that question. You mentioned in an old video that futures are your favorite type of trading. Can you explain? I hope I explained that. When are you doing options? So basically, as far as options are concerned, so I feel it's very difficult to trade options unless we get big buy and sell reversals in the market, or if you want to trade when we get the correlation strategies, index options, and at the money calls or puts. Because I've since I've been doing this, I can't tell you how many people have told me how much money they've lost intraday trading options. And again, I don't have a problem with trading options, okay? But the bottom line is you got to remember one thing and one thing only, is that you really need to focus on the strategy. And the strategy truly is when you get these big buy and sell reversals, you wait for the first pullback where you can start trading options if you like to go long. If we get the first bounce, you can go short. And that's how I would apply the options. But to intraday trade options, unless you learn the strategies I teach you, I would tell you emphatically, it's very difficult. Exactly. There's no emotions in paper trading. Once you start pulling the trigger, you're going to start understanding what emotions, but you should not have any emotions. Been paper trading for 7 years. I learned a lot and still learning. Well, now it's time, John, right, to learn my strategies and to start going live, right? So what else? Let's see here. I agree with the paper trading. Artists. You can, let's see, it's just so many. I'm just trying to, can you use on the Hang Seng? I believe you can. I mean, the strategies work on the Euro Stoxx 50 futures, as long as you can get the data. I think TradingView has the data, right, Albert, for Hang Seng or something? I'm not sure, you got to look into it. But the Euro Stoxx 50 futures, the DAX, and again, on small cap, yes, it does work on small cap. If you just pull up the symbol on TradeStation and or TradingView, you should definitely get the overlay on the symbols that you're looking at. But again, what we focus on each and every day are these same 39 names, okay? Because I feel like these 39 names have the most significant volume. AMD does 80 to 100 million shares a day. You want liquid names. You don't want illiquid names, right? Okay, I think, yes, but it's black. I don't know, asking, there's so many, is there any, okay, BH to everyone, really interested in learning your indicators right now. I use EMA. Well, you got to learn the strategies by coming into the live channel and looking at and studying the videos with me. And I think that's important. I'm in Bangkok. I love Singapore. You guys have TD Singapore. Well, we only trade the US session. So, okay. Asking, do you see any more here that I might be blowing by?
Steve, just scroll down to the end, or get Albert to scroll down to the end for you.
Okay, can you speak a little bit about the person that gets you with your system that is different than just putting a MACD? Okay, so first of all, I look at a standard MACD indicator. 2 is a directional movement that I tweaked a little bit. I don't use the ADX. I just use the buying and selling pressure. Indicator 3 is my own overbought oversold oscillator. I don't use the RSI. And indicator 4 is my own predictive analytics. I believe there's almost 85 variables in there. So the strategies I do have, basically, it's all predicated on 75% of the time I'll use indicators 1, 3, and 4. And then 25% of the time I'll look at all 4 based upon a strategy. Okay. Let's see. I work from home and stay home. Thanks for the time. What month are you on the future? September. On that, can you speak a little about? Okay. So again, I teach the various different strategies. No, I don't. I'm not here during the London session, but I teach people how to use the software that you can use the software during the London session. You know, once in a blue moon, right, when we get aberrations in the market and we see significant oversold, overbought readings, right, then you know, I'll position myself with ETFs, whether I'm going long the SDSs or I'm going long the SSOs or the UPROs. And then a lot of people would take S&P future contracts for 1 to 3 day type of an extreme condition. But again, you have to play stops, right? Okay. Would you recommend getting a funded account for? Okay, so what a lot of people do is they trade their own account and then they look at a Top Step or an Apex or a Lilu. Again, one thing I want to be very clear with everybody, I do not make a penny, transparency, on any of these firms. If it's Optimus, Ninja, TradeStation, I do not get an affiliate fee. I do not get a dime from any of these funded accounts, Apex, Lilu, or anybody. I don't want anybody to say, well, Steve, you recommended this. Are you getting paid from that? No, I do not get paid. Okay, so this is recorded, so I'm telling you the truth. I do not make a penny. Okay, I do not look at candles at all. Okay, so please don't drive me crazy with candles. Okay, I believe that I do have pattern, Jeff, I do have a strategy, the down and up pattern, okay, and an up and in pattern. It's a pencil pattern, as I call it. It should be in the platinum. Okay, let me know if it is. Do you teach the indices? Absolutely. Okay. When are you doing stock options? Well, stock options, I don't really call out. I'm not going to call, if I see a great pattern in the video, am I going to tell you, go look at the 155 call spread or the 150 call options? No, I'm calling a pattern on a buy divergence or a buy reversal. And that's when I'll say, guys, I'll be looking to buy NVIDIA here. If those of you who want to trade options, Jerry, you of all people, you know, when you trade Tesla, if I'm calling a long or a short, right, you're jumping all over it based upon the strategy, right? So, okay. What is the best way to learn your layout indicators? Again, coming into the live channel and getting the videos, okay? All right, let's see here. I think there's, how do I get access to TradingView? So you go to trade, you have to purchase one of our plans, silver, gold, or platinum. And then you go, once you do that, then you go to the TradeEasy site, and then you click on the my SK overlay, and then you can get the charts right there. No problem to trade the US session and work from home. Okay, let's see it on Q&A here. Is this it? Let's see. Do you recommend starting with micros? Yes, I do. Do you teach the trading indices? Yes, I do during this US session. Miles, when I watched your YouTube video, you say you look for 6 to 8 bars. You mean, so yes, so remember I said earlier, if I'm looking at a 5-minute time frame, the trades should last 1 minute to 40 minutes, right? That's 40 minutes. And on a 3-minute time frame, I'll look at anywhere between 1 minute to 24 minutes. You have to do it all over again. What are the exact steps would you take to learn your system, and how would you streamline it? Well, I built it. It took me almost 9 years of my life. So the steps I would take is, again, if I built the system. Now, remember, I was trading, you know, I traded probably nearly 2 billion. Well, not probably, I did trade nearly 2 billion shares before I started building the system. So I was already trading the markets. I wanted to fine tune the markets when the markets went to decimalization in stocks. So because the spreads were wide, there were increments of pennies, right? And I wanted to be able to call market direction, where I was more of a, in my day trading days, more momentum. I was big in the indexes. I was able to see the big buy and sell programs coming out, and I was really taking advantage of that. And sometimes I was anywhere between 3 and 10% of the volume in some of the big cap names on the trading floor. But for me, if I had to do it all over again, well, I'll tell you this, forget about doing it over again. If I didn't have this, I could not trade now in the markets that we currently are in. Okay, so building this software to me has been one of my greatest joys, and that's why I'm doing this now, to give it to teach all of you. All right, let's see if there's one more here. Thank you, Steve. All right, so if that's not all right, so again, when you come to the live stream, okay, I'm going to teach all of you how to look at indicators 1, 2, 3, 4. Remember, there's 4 steps process. 1, understanding the indicators 1, 2, 3, 4. Understanding the numbers to the right of those indicators, right? And then learning the terminology, and then learning the right strategies. Okay, so for me, this is exactly how we do it each and every day, right? Right now, we are, you know, I'm seeing things like Albert's sitting next to me, and we're, as this webinar is going on, and I'm pointing to certain things, and it's just such a great joy that like Albert, for example, got to know me a few years ago, and how his life has changed, and now basically how now he sees exactly, and look at the work that he's put in. He is here with me for a few weeks. He left his wife and his child home because the passion. Remember, I told everybody my door is open. I don't charge $500 or $1,000 a day. You want to make the trip? Alex drove from Montreal. Dimitri came from where'd he come from? From Spain. Okay, I had people come from all around the world. Okay, people here in the United States. Paul drove from Ohio. People drive all over the place. Jeff came from Ohio, then on his way to Florida. My door is open, right? My door is always open. So, and I got Phil coming next week. I have Jesus coming from Jersey, right? So my door is open. And that's the passion and the love I have to be able to give back. If you're willing to make the trip here, I don't charge you, right? You got a hotel 5 minutes down the road. I got a special rate for everybody that comes here, a lower rate than most people would pay, right? We go out, we grab a bite later, we talk, you're here, you learn, you listen. Rita came from California, San Diego, right? People come from all around the world, all right? And so for me, there's no greater joy than to do this in my life right now. And this webinar was something I really needed to do. Next week or so, I'm going to do a webinar on Forex trading. And then the last one I'll do for the month probably be in crypto. Everybody, have a great day off. Okay, I'm here. Again, my number is 914-500-7484. Please, if you're really interested, okay, I'm going to grow this platform with the likes of Victor Sparandio, Trader Vic. He was one of the biggest S&P traders in the world, a very endearing friend of mine, close to 40 years. I've known Victor about 38 years. Tony Saliba, the best you can think of in options. I'm going to really make this platform. Felix Fry, another great educator and mentor in the options market. Alex Gerchev, phenomenal, great friend of mine. I know so many great people that want to be part of this. There's no greater joy than to build this platform to help change your life. Okay, and that's exactly what I'm going to strive to do each and every day for all of you. Have a great day. Again, any questions or anyone that wants to text me, 914-500-7484. Let me have a cup of coffee, and I'm sure I'm going to get a bunch, and I'll return all your calls. Have a great day, everybody. Thank you, Ashling. Thank you, Albert. Thank you, Joe. Everybody, God bless, be well, and let's be consistent and learn.
Thank you, Steve. Thank you so much, everyone, for joining us. It's a pleasure to see all the places that you're popping in the chat that you've joined us from all over the world. Our community is phenomenal. Can't recommend it more. An amazing group of traders, incredibly passionate and supportive to each other. I just scanning back through the questions that everyone has. So with regard to the recording, this is going to be sent to you. Access to the recording will be sent to you later today. Also, the bonus videos that Steve mentioned, so you don't need to reach out to us for those. They'll all be sent to you by email, and we'll have a special offer for new members if you'd like to come and try us and join us. Again, that will be an email. A few questions about Steve's number. I'll also make sure that's included in the email as well, so you can contact him on that. And with regard to the membership levels, so silver is just access to our Discord community and our live stream. Gold is the same, but it includes our educational videos. And then platinum is definitely the best experience because it has this level of live coaching for you 4 times a week, Monday through to Thursday. And then, like Steve said, the difference between pro and non-pro is got to do with the stream that we use, WebRTC. So the pro plans that you can do all the live stream access from a mobile device, and it has sub-second latency. With a non-pro plan, you could just get it on desktop or laptop. So it's the difference in that. So support@tradeeasy.com is our email address if you have any questions, and Steve is so happy to take messages for you as well. If you are from Europe or not from the States, best to WhatsApp him and he'll get back to you in his own time. So thank you everyone for joining us. We hope to see some of you as new members very soon. Have a great day.